All right, welcome everybody for day 2 of the in-person conference room audience. And, we had a good time yesterday, I think. A lot of talking, so my voice is a little bit gruff today, but we're going to get through it. So welcome everybody. And all my online people, welcome Don, Michael, Larry, Robert, Rungemer. Yeah, Rungemer's kind of here, but he's not here. He has to work. Tesla won't let him off. He's doing something else with his vacation time. Rex, Donald, Dan, Nina. I don't recognize your name, but welcome to the stream. And Gary, Wade, Amy, John. Oh, that's John at the same time. Chris, you're in the room. Gayton, W. Wong, Muku, Pat. Welcome everybody. Infinity, Kenny, Brian, Goose is in the room too. Sergio's in the room. Welcome everybody. Thanks for jumping in the chat. And let's get at it, right? Like, who heard of the new exchange that got filed for yesterday? Anybody in the room file for it? Hear about it? The new Texas exchange. Wall Street Journal was reporting on this. I thought this was fascinating. Honestly, I was up late reading about it, and looks like we're going to have a new exchange, and they're going to go live next year, 2025, and then possibly do listings in 2026. So, well, that was the speculation. Tesla maybe move to that exchange, or possibly Starlink, SpaceX be one of the first ones to be listed. It's interesting stuff, right? There's actually 52 companies that have moved their corporate headquarters to Texas already. And so Delaware is like number 1 in the country because their corporate law structure and their available legal system for handling corporate disputes and stuff like that is better and more established than any other state in the United States. So a lot of companies just go to that place because if they have any dispute with anybody, it can be taken care of pretty easily. So, but it's becoming a political issue, and some of these companies don't necessarily like the politicalness of Delaware these days. So we're expanding out. There's 57 companies registered in California. There's 52 in Texas. There's also 52 in another state. I think it's actually New York State. So Texas is up and coming, and we'll see what happens moving forward. It's kind of interesting, though, that they're going to launch an exchange because, there's not a California exchange, and there's not a Delaware exchange. So, is the financial industry moving out of New York, moving out of Chicago? We'll see. Definitely an interesting time, and I'll be here along the way with all the twists and turns and whatever might happen as we move forward. So, what does that mean for us today? Not a lot. It's just some news that I thought was very fascinating, and it's an up-and-coming thing. It's going to happen. So let's get into the charts, though, right? I mean, that's what we all come for. Let's jump into the charts. So ES over here, a little bit of a red day, right? Did we tag that ideal target, even though we had the contract rollover and gap up? Is that the ideal target? I did say we were going to retrace that gap up. We're probably going to keep working toward that. Now, can we hold the support on the gap fill, or do we keep going down? That'll be in the coming days. We'll see what happens there. I don't have a direct answer for that right now. But before we talk trades too much, all trading involves a substantial risk of loss. Past performance, not necessarily indicative of future results. This presentation, it's informational, educational, fun, and entertaining, not a recommendation to be buying or selling anything at all right? Don't buy stuff from people like me. Don't buy stocks, don't buy options, don't buy Forex, don't buy futures, don't buy cryptos, don't buy bonds, don't buy treasuries, don't long them, don't short them, don't trade them. And if you need somebody to tell you what to do, it's not what I do, all right? You gotta hire a financial advisor, somebody that you trust. Make sure you trust them. Have a conversation before you hire them. And everybody out there is just trying to make some of your money into some of their money, right? Make sure you're doing it with somebody you trust. All right, moving on. Calendar for today. Refresh it just to make sure we got the up and coming bestest one. I put my little drawer tool on here yesterday afternoon, right here, 10 a.m. Consumer sentiment right here. So that's coming up in about 41 minutes. 41 minutes. These times are Eastern times. So we've got that consumer sentiment coming out. That may cause a little volatility in the market. We also have the inflation expectations by a non-government entity, the University of Michigan there. That's UOM, that's what that means. And right here, the forecast for consumer sentiment is to go up to 72. We had 69 last month, and you can see it was actually kind of a shocker last month that we got that drop. Are we going to get another drop this month, or are we going to get that climb? I don't know. Typically, it goes on a decline for a few months, but we did make the higher low in the chart. It's all about charts, right? We did make a slightly higher low, and we'll see. We'll see. So there you go. That's no prediction right now either way. I don't know that it's going to have as much influence as the CPI did earlier this week. Turned out the FOMC just kind of a dud, and we're still topping. The market's still topping. IWM definitely, Russell definitely looking a little rough. We'll look at that chart here in a second. Now, like I said, I'm getting a little gruff. May have to grab my water here. So, S5FI, still in the danger zone. S5TH, still in the danger zone. Although we did see a little bit of green on that one yesterday. But, I don't know. The stock's above the 200-day moving average. 66% of S&P 500 stocks above their 200-day. Think about it. We're sitting at basically record highs. And 44% of the market participants in that market, in the S&P, not above their 200-day moving average. Is that bullish? You tell me. I mean, that's a warning sign to me. And we've been on a declining kind of trend here. This is a giant market oscillator. Last time we were at the bottom, back here in October 22. And the top, we tagged it right up here, April 24. Down maybe the direction, the bias direction for the next couple years. So be careful on that one. And Kimberly's in the room too. I see her on the chat there. Bob, Infinity, Mary, Alan, welcome everybody. Good morning, good morning. If you want to say hey, if you want to jump in the chat, all you got to do, be a subscriber on the channel. Click the button on the other side over there, the little green logo. Makes you a subscriber pretty quickly. And I do this every morning, if you didn't know, 9:15. Today I have a studio audience, but next week I'll be back in my regular digs and with my fancy buttons and cutscenes and stuff like that. So make sure you subscribe. Make sure you hit the bell with the notifications and come join us every morning, 9:15 Eastern. We try to go through the markets. So, all right, moving on. And my phone vibrated the whole table. So, ES, like I said, just kind of probably going to retrace back out that gap up with the contract rollover. We had a nice big gap up. We saw that on NQ also. So the gap doesn't really tell us anything because it was a contract rollover. If you're unfamiliar with these charts, NQ1 exclamation point. This is trading view right here, NQ1 and ES1. Those are the futures. ES is S&P 500. NQ is NASDAQ 100. And then we also have the small caps right here. These are the ones I like. A lot of people all the time ask me, why don't you pay attention to Dow? I mean, mainstream media loves the Dow, but I don't feel like it accurately represents the market at all. It's got so many adjustment factors. In fact, the biggest influence in the Dow right now is what? It's healthcare. Healthcare is United Healthcare. So is that reflective of what the market's actually doing? I mean, pull up the chart on United Healthcare. It's not been participating very well. So that's why the Dow has been kind of lackluster. So I don't feel like the Dow accurately represents the strength of the market. And maybe S&P and NASDAQ don't either, but when we look at Russell here, this is where 85% of our country works. You hear me say this all the time. These are the small caps and some of the mid caps right here. These are, some of this is our crypto miners. Some of this is, all over the place. Think about it. 8.5 out of 10 people the half guy, the short guy. 8.5 people out of 10 work for one of these companies right here. I mean, look at this chart. We made the high back here in November of 21. And we're still a long way from making a new high on this chart. Why does the country feel like things aren't going so great? Well, it's kind of in this chart right here, right? I mean, a lot of the small mid-cap banks right here, a lot of the ones that have had trouble with the raising interest rates right here in this chart. I mean, this is what you could say this is kind of the heartbeat of America right here in this chart right here. And I think this is why that narrative that Bidenomics is not so great, hey, 85% of us are working for companies right here that are struggling to do any kind of performance here. It's just sideways, choppy garbage. As you know, those of you that are familiar on the stream, I say that all the time. We're just in some kind of correction here. It's not really strong either way, but when you really start breaking down the chart a little bit, which we kind of are doing during this session here, this live in person, and we'll maybe go look at this chart more in depth later today, it's looking kind of weak, looking like we could actually get another strong move down, possibly on the banking. There's somebody in the room that used to work for FDIC that said there's definitely something brewing with things she's heard from former coworkers and stuff. I mean, there's I don't know what it's going to be. Maybe it's that. Maybe we've talked about some other scenarios in the room over the last day or so, and I mean, this chart's saying something's up. Something's up. All right, what's up? I'm not sure yet. I've thrown out lots of possibilities over the past weeks, and stay up to date. We're going to keep on top of it. We're going to pound it in the dirt if we can, and otherwise, if everything just all of a sudden changes and looks great, I'll be one of the first cheerleaders to let you know I changed my mind. I was totally wrong. We're not going to crash. But I think something down the downside is coming. It's here specifically in this chart more than any other chart I know of right now. So definitely be careful. That's right. Smash the like button. If anything I say is awesome, helpful, maybe not helpful, maybe just something new that you heard that you didn't hear anywhere else, give me a like. Give me a share with somebody else that might find this information beneficial. Thanks for the reminder in the chat. All right, moving on. Oil. We kind of hit this list every day, and then we go through what's moving today. So bear with me just a minute. We'll get there. And the oil charts, well, stuck at the roadmap line. Stuck right there. Although it hasn't really shown weakness, it hadn't really shown strength. It's just stuck right there. This is, you can see we had a red candle coming up into the roadmap line. It's just barely in there. You can barely see it. It's so tight because price action's been so sideways that it's just made the roadmap line just a little thread. And if you want to know what the roadmap line is, you want to know more about it, you want to get it on your chart, links in the description, click the more button down below. And it's like $5. You get like 3 months of the watch list for stuff that's bouncing. We'll go through more bounces later. And then you can get in Discord and come hang out with my awesome community, the ones that are here with me right here today. All right. So oil sitting at that roadmap line, that is a support resistance line in the market. And right now, we're underneath it. Bias slightly down, but with the way this is kind of banging against it, you can see we've been doing this for all of May, and now into June, we did get a little, it did reject it down a little bit, and then we came right back up, right in that zone. If we can break through, that's going to be bullish. That's got to take us right up to this 85 area probably, 84, 85. And if we do break below that low we made just, 10 days ago, we're probably going on down to the mid-60s. So that's kind of the tell right there. We're in this range, kind of defined by 72 up to about 78. And if we can get above that like 80 area where we topped out, we tried to break out really hard right at the end of May. If we can get above that, probably going to start testing higher resistances like that 82, possibly 90, possibly 105 above that. That's where this big 618 level, when we zoom way out here, this high we made back here in all the way in March of 22, down to this low we made in April of 23. We run the fib line there. That 618 level comes in 105 right there. That's going to be a major resistance in the market. We get above that, odds are we're going ridiculously higher on the price of oil. So the IEA, the International Energy whatever, yesterday coming out saying that peak oil is happening this decade. And then we saw lots of people taking offense to that, especially the Saudis, saying like that is a absolute ridiculous statement that's very dangerous for trading and the oil market. You should not be trying to say peak oil. They said peak oil back in the 2010s was going to happen for that end of that decade. And last year was actually the peak gasoline usage we've ever seen in the world. And they're expected to beat that again this year with the numbers. So the Saudis are saying like, IEA, you're being very dangerous because people make plans on the production and stuff like that around peak oil. And if we plan our infrastructure and life cycle analysis of these facilities around peak oil being this year, and it's not till 10 years later, 20 years later, 30 years later, those facilities aren't going to be there, and it's going to cause price problems. But again, how do we trade today? Right there's the resistance, right there's the support, right there on the chart. So bigger narrative and smaller narrative. All right. I like the technical analysis. If you haven't noticed, if you're brand new here, I feel like the chart tells us the story for what we can trade. The bigger picture, those stories, those are things that are going to happen over 5 years, 10 years, 20 years. But that doesn't necessarily make us money today. So I use technical analysis to make us money today. And speaking of today, gold getting a nice recovery, breaking higher than the high yesterday. I'd like to see it get higher than the high 2 days back and really get some strength going here today. Market looks like it's just opened up, getting some alerts popping off right away. I'm not going to go into those right at the moment. Bitcoin also showing a little bit of weakness here. Still riding that downtrend of highs that I've been following for a few days. Still testing it. If we break below that line, excuse me, my orange monster talking to me. A couple people said, "Why don't you have the monster on the screen?" It's because I'm in a different room. I don't have my whole display set up here. So anyway, sitting there right on that line. And if we can bounce, we're going up. If we break below it, we're coming back down here to the 50,000 area maybe. Let's go look at the actual spot market really quickly. We could be pushing on down. Let's draw that trend line. Trend lines are not the strongest technical indicator, but it's this pattern in particular is kind of a breakout pattern where we break above a downtrend of highs, we retest it once or twice or 3 times, and then we move away strongly. So the real breakout tell, if you will, in the market is a move through these highs right here. These highs where we banged our head, and it just happens to be the same place we banged our head all the way since March. So if we can break up through those, we're probably going to 77,000, maybe 85,000 per Bitcoin. If we break back below this trend line right here, which is today it's down to about 65,000, we're probably coming right down to the 60,000, maybe dip a little lower into the mid 55,000 area, mid 50,000s. We'll see. May go retest this low. That's why the mid 50s, because of this low right here. We could possibly make one little spike down that goes lower than that low right there. From right back there at the end of April, beginning of May. All right? Moving on to Ethereum, and the Ether spot chart tells a better story than the futures chart at this point. A little more accurate on the prices. And I think we're going to continue possibly to grind down into this roadmap line right here. You see how it's support. Like I said, we talk more about roadmap line being support and resistance. Well, look, support, and if I grab the right there, circle it just so you can see it really well. Support, moved away strongly. Didn't break out, had a little trouble breaking above these prior highs right over here. Couldn't do it. And possibly coming back to another visit. And this will be a higher low right here, right? If we come test this area. JT's got 2 alerts on there. I'm probably going to buy some if we do that test. All right? Probably going to do it unless we just knife it right on through, in which case that's not so good. No bueno, as I say. But if we can hold that support at the roadmap line right there, I'm probably a buyer, especially if we turn and burn. We could be burning all the way up to $5,500 per Ethereum. That's pretty strong for Ethereum right there. And kind of something I hope happens, honestly. I hope we get that 3,200 test. We hold support there, and we turn and burn it higher. That could be what the market's waiting on. Now, those people are like, JT, the spot ETFs, they were approved, but none of them got listed. So while they did get approved, nothing came on the market. So there's no demand for Ethereum. So we're just shaving back off all that excitement. And it may be until we get back to the roadmap line before they actually hit the market. Could be in July. Could be in July before BlackRock's hits the market. You know, BlackRock's being the IBIT, as far as the Bitcoin ETFs go, BlackRock's has been one of the strongest ones. When we pull up the data over here, you can see they've sucked up almost $21 billion of Bitcoin since they hit the market just a few months ago. Just a few months ago, back here in January, we soaked up $21 billion of Bitcoin. Like, how much Ethereum am going to soak up? I estimate like 10%. Like, we go to CoinMarketCap, which I don't have up because I'm not at my normal thing. So we'll grab it real quick. CoinMarketCap. Pop this up really quickly. And we can see that the ratio between Bitcoin and Ethereum. Bitcoin, 54% of the market. That's all of crypto. Ethereum, 17%. All right? So maybe half of Bitcoin. I mean, maybe $10 billion, but I feel like it's probably more like 10% of Bitcoin for a spot ETF. But I welcome being wrong. Like, let's put some demand on Ethereum. So if you didn't know, there's no centralized exchanges, but a lot of these places do the best they can to get what they think is their price on Bitcoin. So moving back over to the charts. Moving back over. What's moving today? What can we actually do, JT? So looking at dollar, bounced off the roadmap line very strongly. This now, strong dollar, strong gold. Does that make sense? Does that fit anybody's narrative? What was I saying yesterday about causation and correlation? So we're seeing strong dollar and strong gold today. That doesn't fit the narrative that dollar strong, gold weak, dollar weak, gold strong. Like, that didn't fit the narrative at all. Not at all. So, like I said, don't confuse causation and correlation. Right there. That's probably, if we can get above this zone right here where the 618 is, if we close above here today, highly likely we're going up to 106, possibly 107 on the dollar. And if we get up there, it's probably just a correction or two away, a little consolidation, maybe a month or something, maybe a two away from going to hit that 108.50 area that I've been talking about for, gosh darn, near a year now, it seems like. Probably has been a year now. Probably going to go up there, find major resistance, and then possibly it's going to go on a big down, all the way down to the mid-90s down here. That's where we're probably headed off of this high, all the way back from September 22. That's 2022, September 2022. We made that high in the dollar, and we've been grinding down, and it's possibly going to push us on down to that mid-90s before we find the bottom. Could go lower than that, in fact. We did bottom out back here. Think about it. All that money hitting the market, and the dollar bottomed in 2021, right? And then money supply, whatever, took us higher into 22. The market kind of bottomed out, and then we've gone on to all-time highs, but we're not. Think about it. Like, we made all-time highs right at the beginning of 22, right? Like, all these people that say the dollar has to drop for the market to pop. Look at that. We were rallying. The dollar was rallying into the all-time high that stood for a couple years. And now the dollar's up here as we've made new highs in the S&P. So don't confuse that correlation and causation. All right? It's like they like to talk about it in the mainstream media, but I don't feel like it's necessarily accurate. Now, Adobe right here, popping up, still highly likely to go visit that 618 zone down there. I feel better about it, but that could have been the bottom. It very well could have. Staying above the market roadmap line on this daily chart indicates that maybe we're done with Adobe on the downside. Possibly. I don't know. We'll see. Cautious right now, though. If we get a close back below that daily roadmap line, probably going to come visit this area down here on my target and put it in log mode because it moves more than 50 bucks. That looks highly likely that we may finish that move up. This may be just an intermediate bounce. We could be looking at that high right there, that low right there. Resistance zone right now is right here just above where we are. So resistance right there at 550. We turn down from there. Target's down here. 375, 395, 400, somewhere right in that zone. MSTR, getting a nice little reprieve after beating down yesterday. But we're just sitting at that resistance zone. Just like I talked about the resistance on Adobe, this one's already sitting there. If we don't break above it, the odds are we're going to visit this roadmap line right down here on the daily. Maybe make a higher low than we made back here in May, but we're probably going to visit it if we don't just break out and go right now. So think about it, bigger narrative. If Ethereum pulls back to 3,200, does it pull Bitcoin down below that trend line and we go hit the roadmap line and then take MSTR down to its roadmap line? Like all these things are kind of sitting there like as warning lights. Maybe there's a pullback in crypto brewing and it's going to fix all these charts and set them up to go much higher. So that might be what the crypto market's waiting on, is this little flush out, get some weak hands on the market before we pop the next big pop. I mean, it's just, when you start diving through the charts and you say like, well, Ethereum needs a pullback, Bitcoin needs a pullback, MSTR needs a pullback. It's like, well, maybe if the pullback happens, like that kind of sets everything up to go higher then. Like that's what the market's just waiting on. So that's one of those things that, when I go through these every day and I'm like, well, that one's kind of that doing this. And, it's like the back of my mind, I'm like stacking them up. Like I'm like, check. Well, looks like crypto might get a pullback. So that's, when JT like gets wishy-washy on stuff, I'm like, well, I don't know. Like, usually I've got something in the back of my mind kicking around like, well, a bunch of these charts are looking like they might be setting up for a pullback. So moving on, ZS, finding resistance at that roadmap line. Like I said, it's a support resistance zone. Finding resistance. It may go on another extension lower. That low right there, that high right there, that could push us down further into the yellow zone down here. 150 could be where ZS heads next if we break on down. This 170 area right here is probably support right now for going higher. We've already kind of failed to break through immediately. So if we see more weakness, we'll come test this 170 area probably, and then possibly get down to this 150 area if that 170 area doesn't hold. So next up, Tesla, big news. We're moving to Texas. How fast could that happen? It could happen in 24 hours if all the paperwork's ready to file. Like they could be there by next week. Now, if it's not totally ready, all the I's aren't dotted, all the T's aren't crossed, somebody files, whatever, blah, blah, blah. It could take a week, and there's already somebody filing an injunction in Delaware with the judge for the compensation package that, well, maybe they put an injunction on moving from Delaware to Texas. So that's out there as a possibility. And also the vote that happened to approve the package, the pay package, right? All this news, Tesla advertised something for the first time, and it wasn't a car, it was a pay package for Elon. That doesn't change anything with the court case. Now, the judge can take it into consideration, or the judge can say, I don't care. And then if they uphold that, right, if the judge makes her final decision, which is coming up like in a week or two that she's due to make her final decision, she holds that up, Elon only has 30 days to file with the Delaware Supreme Court, or Tesla has 30 days to file an appeal. And if they uphold it, that's kind of like the decision. In Texas, because of the cross-state, interstate, reciprocity, whatever, Texas is going to uphold Delaware's decision. So what that means is Tesla's going to have to rewrite a whole compensation package that's substantially different from the 2018 package, and then put it back through shareholder vote for it to actually get approved. So this, while it says that the shareholders are supportive of, supporting the 2018 package, it doesn't make it approved at all. Now, if you didn't understand that, like I spent time last night reading through it all, like a very long article about it, and it didn't change anything at all for Elon, at all. So some faces in the room are just like, what? That's the way it is. Like, it's all in the legal system right now, and it doesn't really change anything. And the judge doesn't have to take into consideration the shareholder vote at all. She can just say, I don't care. So that's just wild that that's the way it works, but that's the way it works. Interesting, right? Like a couple people are like, oh, I didn't even know that. So moving on, FRHC right here. Right there, popping up into the resistance zone one more time. Nice strong candle. Are we going to break out? That's a different question. This does kind of look like a giant measured bounce. Look at that, right? Just short of, this is back to Goose's theory that sometimes we come up short just because of all the algos and the people watching. So it didn't hit the ideal 618, but that could have been it. We're back above the roadmap line. We're pulling up away from it. If we can get above that prior consolidation, it's game on right here. The game on, the conservative target, probably 109, and the more aggressive target right here, we'd use the 3-point tool because it's a measured bounce. 1, 2, 3. The aggressive target for this, all the way up here. Let's just remove the fib so it doesn't confuse anybody. All the way up here, 171, possibly 200 area, right up in here. That's the conservative aggressive target. The aggressive target up at 300. 300. So that's a wild potential right there on Freedom Holding Corp. So that's pretty strong. Pretty strong move right there. All right. GLD, which we're in one of my systems we're long on, and a lot of people in the room were long on it, and we're hoping that this continues the breakout and strong today. We'll see what plays out. Looks pretty good so far for a bounce. We'll see. We do have resistance up there at 219, which would be good for our position because it's just a short-term thing. So, yeah. If you're interested in Gold Rush, call the team, 321-888-3962. Ask about Gold Rush. That's what we're in right here. It's a weekly trade on gold. So, without giving more details, because that's not really, this is not the venue for that. Moving on. NVDU, nice extension right here. 140, possible upside target right there. And then boom. Well, nice pop, but that looks like a piece of garbage chart. I mean, let's be honest. Let's be honest. That looks like a giant downward trend. Not quite a dumpster fire yet, but all we need is like a reverse split in here, and then we'll like that'll be a dumpster fire, right? Like that's it's like the guy standing behind the dumpster with the matches, like, and I don't know. That one doesn't look too good to me right now. I'd be very careful if you're hunting a bottom. Be very careful on that chart right there. All right, QXO. Looking at that, it's on the decliners list, but are we gonna do a market roadmap bounce? That would be a beautiful thing right there on QXO. That high, if we can push down to there, could set us up for a move up to 335. That's a pretty amazing move right there, potential. Look at that. I mean, that's like you could buy shares at the bounce if you bought shares early. I mean, I'd probably be a buyer at the 200 area up here after the bounce happened. We're kind of confirming, but that's the target's up at 335 right now. So if you just bought shares, that's like a double from where we are right now, if it bounces. Of course, it's not really high probability bounce until we move back up through the 200 area. But if you're somebody that would risk a little bit, you may, well, where would I know I was wrong, right? If I were to buy at the market roadmap line or, right now even. Well, if we move down through 90, it's starting to look less likely that one's going to work out. So you could risk, $70 right now for potential double your money. You could wait for the market roadmap bounce, then you'd only be risking like $10 for potential maybe triple your money. And these are the kind of opportunities out here. And this is with shares. This is not options. This is shares. These kind of opportunities show up on the chart, and that's why I go through the decliners list too. Right here is an opportunity. This is one to keep an eye on for the next week, 2 weeks, 3 weeks. Like, keep it on your watch list. QXO. It's a pretty smoking pattern right there. It's shown that, like, look at what it did last time. Shot up there, 290. You don't think it can go again? I mean, it did that in what, 5 days? That could be a fast mover. Like, you could double, triple your money in 5 days. That potential's out there. I'm not telling you to do it. In no way am I saying do it, but there's a potential right there on the, maybe one of the better things I've seen this week. In fact, I may make it the chart of the week this week. We'll see. All right, moving on. RH, right here. Oh, down. Ooh. How many people in the room think that's a choppy sideways? Anybody? I see a head nodding, but I don't see hands raising. Anybody? All right. ASML. That one's probably pushing on up. The target on the upside. If that was a market roadmap bounce on the 4-hour chart, didn't do it on the daily, just came up shy. Target's up there right around 1100. So still upward bias. This could be a top. It's getting a little toppy. Might need a bigger correction, but upside target still just a little bit above us. But if you're not already long, the opportunity for the upside kind of small compared to the potential downside right here. Very poquito, un poquito. Anyway, MSM, I don't think that's the right MSM. Let's go to the New York Stock Exchange MSM, and there we go. Ugh, another choppy sideways. These guys, I'm trying to remember if this is the one I know of or a different one. That's MSC Industrial Direct Company. These guys provide a lot of industrial equipment to machine shops. Them taking a giant dive before they even take earnings here, that's not the strongest indication of a strong economy. But they've been choppy sideways for a long time here. Haven't been like banging it out with all-time highs like the rest of the market. So this is more indicative of Russell, right? Right here. That's interesting chart right there. Anyway, I don't think it's necessarily tradable, but it tells a different story for me. ALL, Allstate, insurance, coming back down to the roadmap line. Could we hold? This could be a market roadmap bounce. Watch this one in the coming days. This one might make the weekly watch list right here for market roadmap, especially if we get just a little bit more flush and hit the roadmap line right down there. And HSBC, stop out. Right there. All right, moving on. FSLR, up at the target. Man, I don't remember when I drew that target. Maybe somebody in the room does, but I got lucky again, I guess. Look at that. Turned right back down on that target. We might come back to the roadmap line. That's the little super hype, popular move on solar panels and alternate energy that's been going on the last couple of weeks might be done for now. That rotation. We get rotation through the economy, right? This was rotation back into solar panels. Now we might get rotation back out. So caution right there is what I'd be warning. Like that one's not an opportunity. That's more of like, you might want to book some profits if you're involved in FSLR right now. Toyota Motors right here, continuing to show weakness. That support zone still right down here around this 180 area right there on the chart. In and we're broke down below the uptrend of lows. Not too good. No bueno right there. If we don't just crazy Ivan it right back up, get back above that line, probably putting downward bias on NUE for the next little bit. And we could see a move back down to the 100 area, another $50 down. LABU, that's biotech in a leveraged way. Be careful, be careful, be careful, be careful on biotech and leverage. That's like two of the things out of the four things that I don't like to trade because sometimes, a lot of times, they don't follow my patterns. Like biotech, that just, like you have the FDA involved, it makes the chart not do the patterns, all right? And then you add leverage on top of that. Leverage skews the patterns. So it makes it so that the patterns don't always hit the targets. Be careful on leverage and biotech combined together in this one ticker. It shows up on the list all the time because it moves like crazy. But hey, we're above the roadmap line. If we hold it, upside target 142. But look at the risk. The downside target all the way down here. Ridiculous levels down here, like 20, 33, 20. So like, there's a lot of downside risk, but $30 upside potential, but like $70 downside risk. So be careful right there. IWM, like I said about Russell, well, we get below the roadmap line. Watch out below. Something's brewing here. We could be heading down to 180, 170, right there down below. So mRNA, looks like that move is done for now. I have to warn you, like, don't get caught up in the narrative that even though they got their second vaccine approved or whatever, this thing could be coming down to a lower low. It definitely has the chart pattern that was a basic simplified three-wave up, where this move up off the low right here and this move up right here, almost at parity, almost exactly echoes of each other. That can lead to a lower low right there on mRNA. FAS right here, looks like we're coming back for a test of the roadmap line. I think Goose, you said you were out. Made some money on FAS.
Oh yeah.
Yeah, good job. Good job being out, because definitely retracing.
That was actually a mistake trade too.
Yeah. And funny enough, right here, not only is FAS the big cap banks on the list with a leverage ticker. This is a leverage, 3x leverage. Be careful on leverage. I keep saying this. DPST right here, 3x leverage on regional banks, which are mid, small cap banks. This one not looking too good. We break below this support. This is back to the banking problem. 500 something billion dollars worth of money missing off of bank balance sheets due to these interest rate raises and the treasuries being undervalued to making these banks solvent. All right, a lot of these banks, a lot of the regional banks have up to 3x leverage on their treasuries. Think about it. And their treasuries aren't liquid; they're frozen and they're undervalued. This is a well, it's not mandatory to have a 3x leverage on them though.
No,
But it's mandatory to hold them. That's true. But is this a problem? It could be a problem. All right, BA right here, Boeing. Well, right now we're holding the uptrend of lows pretty well. Pretty well. Could test right here. We could test a 618 move. This was a 3-wave move up into the roadmap line that could possibly result in a dip right down to the actual target that I've had for a while, that actual 618 line right there around 157. That'd be kind of crazy, right? We bounce up, bounce off the roadmap line, come down to 157 and revisit. But we're holding support in this area.
So the chart's causing more loose bolts.
Yeah. I mean, maybe we have more problems. Maybe we don't. Maybe we get the final flush out, and possibly we go but possibly we hold the uptrend line there, break through the roadmap line, and all of a sudden Boeing's issues and woes are all better, and we go cruising on up to 600. That's kind of like wild, right? A lot of the people in the room, and maybe you remember when I drew this big blue arrow on the chart. Back before the first door flew off, and Sledge in the room here, Sledge is here with me. He's like, I want to know how you got that door to fly off after you drew that arrow on the chart. So, I mean, it's just the charts. Like, it's just the charts. Like, do these charts make the news happen? It's what really bends the mind of a lot of people that watch me for a little while. So, this one. We got some work to do before we get really bullish. We're still below that roadmap line, still kind of in the Tesla category, is like consolidating. You know, Tesla does look a little stronger in the fact that we're testing the roadmap line yesterday, trying to test it again, possibly today. I don't know, the red candle, we're gonna have to get some strength to do it. So, I don't know, Boeing and Tesla both have a very similar chart. Very, very similar. RARE. Goodness, Ultragenics pharmaceutical. That sounds like a piece of dangerous something. And it's a pharma, it's a biotech, FDA involved. Just be careful out there. Be careful. That's a choppy sideways chart. No good direction for the next little while. ENPH. Now this one really working hard on this potential breakout, but it rejected. You see what it did? It gapped up. Immediately got a red candle. Like if that was a breakout candle, I would expect it to be a green candle. It was a red candle. We took the next day, red, yesterday, right back down below that breakout line. Today, another red candle. Probably gonna go retest the roadmap line at the minimum. If we hold it, hold 120, break back above this high right here at 138. Then you can get some confidence that we're probably gonna cruise right up to 200, which would be a strong move on shares. That's like $70 on shares. That's pretty strong. Now, if we break below that roadmap line and we get on down in this zone, well, it starts tipping the odds we could go visit the 60s, which is a 50% haircut. So definitely be careful. You know, it's that thing, like if you're going to get in now and you're proven wrong by breaking below the roadmap line, breaking below this line, just get out. Don't stay wrong, right? Don't double down. Don't triple down as we drop. Don't try to knife catch. Like, staying wrong is where you lose the big money. Being wrong, you lost a few bucks, right? We can try again. If you stay wrong, you double down. That's where you take a big loss. Don't do that. Don't do that, all right? I'm not telling you what to do, but don't do that. Don't take big losses. All right. Twilio, this one's still doing that watermelon seed squeeze thing that I don't like and possibly breaking out below, which could lead to a bigger downside. Even though I use Twilio for some of my services, be careful, please. It doesn't look like the strongest chart right now. Could be a consolidation before another lower flush. And at this point, it kind of looks like it needs a touch down below this prior low back here in October of 22. Think about it, when the market bottomed. And we've only, I mean, despite all the things it's done since October 22 low with the rest of the market, it's only like $13 off the low, and might be looking to make a lower low. So be careful. Be careful. And look at all the green earnings. Like, earnings have been pretty good. We go actually look at it, but it tells a different story when you start clicking on it. They reported a profit, estimated a profit, but when they standardized their earnings, it was a loss. That's not good. That's why I think earnings are all like, it's back to whose line is it anyway, right? Like, the numbers are all made up and whatever. It's like, oh, we can report a gain, but actually if we do it the standard way, the normal accounting way, we made a loss. What? Come on. So I digress. That's why Twilio's probably not doing the best. So just admit the losses, be honest with everybody, and probably your stock could do better. But anyway, so that's the list for today. And going back to the bias, like I said, give me a thumbs up or anything if I said anything that was helpful, beneficial. And I should have at least 35 checks with the people in the room, and 35 thumbs up. Anyway, S&P, we made that gap up this week when the contract rolled over, and it actually showed up in the cash index too. So we may go fill that gap. That could happen today. It happened. We got the gap on the CPI, and then we got the futures gap on the contract rollover. We may fill these gaps, so we may see some weakness in the coming days, and we're kind of feeling a little toppy. We hit the ideal target. Can we go higher from here? I don't know. We're going to see. We spent a lot of time talking about it yesterday here in the in-person event. We're going to spend more time talking about it today, and I thank everybody for coming. I'll be back live with you 9:15 on Monday. Hope to see you then. Make sure you're subscribed. Bye for now, everybody. We'll see you. Bye.